Good morning, good evening, good afternoon, traders all around the world. This is FXPassion with another recorded webinar. You should see this webinar on Tuesday. Okay, we are recording this on Monday, but this webinar is going to be on the playlist on Tuesday. So our goal for you is to become consistently profitable. This is forex trading for beginners, and you should not be allowed to trade with the real money until you reach the goal. What is the goal? To become consistently profitable. If you are not going to listen to us, here is the risk disclaimer: don't trade with money you cannot afford to lose, and the webinars are not investment or trading advice. They are for educational purposes only. And remember, 90% of traders who makes it between the 3rd and the 5th year of learning. For homeworks and or additional coaching or training or just questions, right? If you have a question about the original Fibonacci or the contrarian Fibonacci or the confirmation Fibonacci, please send your questions to the Gmail contact or Skype or LinkedIn or to the Dukascopy webinar page. So let's start with the picture. Okay, let's read together. So we started talking yesterday on Monday. We started talking about the Fibonacci of the confirmation, the so-called confirmation Fibonacci. So number one, we use the Fibonacci of the confirmation. Number one, to re-enter trends when we have missed the entry at the C. Right, at the capital C. Number two, to confirm the extension from the original Fibonacci of the larger time frame and the smaller time frame. We didn't talk about this yet. We're going to explain to you. Okay, so the point 1, point 2 is extremely important because we are using the confirmation Fibonacci to confirm the extension from the original Fibonacci of the larger time frame and the smaller time frame. Trading rules: number one, until the de-extension of the contrarian Fibonacci is still inside the AB boundary of the original Fibonacci, you are entering trades with a probability 50-50. Right? Number two, if you can find a contrarian Fibonacci with the projected de-extension above, below the A of the original Fibonacci, you are entering 80-85 probability trades. Remember, we are not talking about the Fibonacci of the confirmation, but those are the trading rules in general. When we address the original Fibonacci, the contrarian Fibonacci, and now also the Fibonacci of the confirmation. Entry: when you find the C, your stop loss should go 10 to 100 pips, it depends on the time frame, above or below the A of the original Fibonacci, and your take profit should go 10 to 100 pips below or above the D extension of the original Fibonacci. Okay, number 4, when you find the C, you should check the trend direction from the larger time frame. Right, we talked about you need to have, as a beginner trader, you should have a trading time frame and the confirmation time frame. So if your trading time frame is the 1 hour, 2 hour, 4 hour chart, just an example, the confirmation time frame is going to be the daily. So when you find the C, you should check the trend direction from the daily time frame and compare it to your 1 hour chart, 2 hour chart, 4 hour chart, whatever, prior to entering the trade. Number 5, the last thing you need to do is to identify in what zone are the Fibonacci's on the larger time frame and the smaller time frame. So are we trading a rally or a dip in a downtrend? Are we entering into a retracement, or are we trading an extension trade, which the Fibonacci of the confirmation is for? And number 6, when you arrive at the point where the D of your Fibonacci of the confirmation is above, below the D of the original Fibonacci, you should take profit at the D of the original Fibonacci. This is the specific of the Fibonacci of the confirmation we are going to talk today. And also things to remember: the higher time frame controls the smaller time frame, extremely important rule. So if the original Fibonacci on the daily is down and the original Fibonacci on the 1 hour chart is up, which one do you think is going to win? And the daily, of course, because the higher time frame controls the smaller time frame. Number 2, the Fibonacci is stronger than the trend line. Sometimes the market is going to break the trend line, the Fibonacci is still in place. Okay? Number 3, you want to buy or sell the Cs and take profit at this. Of course, we're talking about the original Fibonacci. Number 4, you find the C using the contrarian Fibonacci. Number 5, we are in an extension when 5.1, the market has found its C and the trend has shifted. The market broke the counter trend line break. 5.3, the market has crowned. We didn't learn crown yet, we're going to learn next month. And of course the best scenario is when you have all these reasons, right? And number 6, you can put your stop loss below above the sub A, but bear in mind that the best place is always going to be the capital A of the original Fibonacci. So a lot of things, a lot of information, right? Now let's dive into the live chart, and we're going to use Canada JPY as an example. Canada JPY. And today's webinar is how to find the Fibonacci of the confirmation in an uptrend, right? Canada JPY daily chart. Maybe. Okay, so let's see. Let's first explain what do we mean when to take profit, right? So this is the original one, this is the original Fibonacci, and of course we are going to have the contrarian, right? Sub A, sub B, sub C, sub D, and in some point in time the market is going to break the counter trend line of the original Fibonacci, short line. Okay, the market is going to break the counter trend line of the original Fibonacci, and the trend is going to shift from the retracement to the extension mode, and we're going to use the Fibonacci, the confirmation Fibonacci. So this is going to be our A of the original one. Remember, the original one is the most important one. The other two are just to find trends, inside trends, you know, maybe to trade the retracements. So this is the C of the original one. Okay, and talking about the rules before, when you come to this place, when you have the confirmation Fibonacci at that point of the extension, so this is going to be this sub A, right, and this is going to be the sub B, of course, and then inside the sub A and sub B we are going to have the sub C. Okay, and our projected, the extension, everybody, is in here, right? Green goes to green. Now if you take a horizontal line and you put it on the projected, the extension of the confirmation Fibonacci, which is the sub D level, okay, if you can see from the right to the left side, the extension of the confirmation Fibonacci is above the extension of the original Fibonacci. In that case, and this is going to happen, of course, because the market is going to wave when this happens, you have two choices. Choice number one, stop trading. Okay, don't enter any trades at this last Fibonacci. This is the option number one. Or number two, of course this is just an example, sometimes the projected D is going to be far away, and this is going to be connected to the risk-reward ratio. Okay, but this in this example is here. So number one, don't trade this one. Okay, or you can trade this one, you can trade this confirmation Fibonacci, no problem. And how we're going to trade? Well, with the same rules, you're going to wait for the counter trendline break, and your stop loss should go or below the sub C. Let's color this in red, or even better, the best place, your stop loss should go below the sub A. Okay, and if you're going to trade this last leg, remember to take profit not at the sub D, which is the appropriate extension of the Fibonacci of the confirmation, but you must take profit at the D of the original one. In this example, the difference is small, but sometimes we are going to have a big difference, 200 pips, 400 pips, and sometimes we are not even entering this last leg because of the risk-reward ratio. Okay, in this example the risk-reward is still in place because the sub D and the D are almost at the same area, even though you should place your take profit at 10 pips or 100 pips in front of the D extension. This is the most important thing. Or just stay out, everybody. Stay out, wait for the market to hit the D of the original one, right? And then wait for the retracement. Okay? When the market hits the D, what is going to do the market? The market is going to retrace, right? Because this is how the market behaves. The market goes from the extension to retracement, retracement extension. I should color code this in black, not red. There you go. Right? This is how the market behaves. This is the market movement. Right? Extension, retracement, extension, retracement, extension. So when the market hits the D of the original one, which is the father, right? The original one is the father, the other two are the children, okay? The higher time frame and the higher Fibonacci controls the smaller time frame and the smaller Fibonaccis. Okay, so wait for the retracement. When the market is going to hit the D of the original Fibonacci, stop trading, everybody. Stop trading the Fibonacci of the confirmation, because the market is going to retrace. Of course, we don't know until what level, but don't trade. Okay, stay out of the market. Try to figure out what the market is going to do, or is going to retrace with the contrarian Fibonacci, or is going to give you a shallow retracement or a deep retracement, and when the time comes, you can apply again the Fibonacci of the confirmation. Now this is the Canada JPY daily chart. Let's see if the weekly is different. Let's wait for the software to respond. Okay, weekly chart. So this is the weekly chart, right? Okay, Canada JPY weekly chart. Where should we start? Where should we start with our analysis? Where is the starting point of the uptrend? I would say it's here. So this is going to be our A. and this trend line is going to be something like this, because we don't have any other confirmations. Okay, this is going to be the long-term uptrend line with two false breakouts. So we are going to start drawing our original Fibonacci from the starting point, from the lowest low, the absolute low, or the starting point of the trend. So let's dive into the chart. I'm going to delete the arrow, and let's see if the market is going to break our original Fibonacci. So this is going to be our A. The B is going to be what? The first high as soon as possible, right? Is this one? This is the first high as soon as possible after the A. And let's draw the Fibonacci retracement tool. So we have the new sequence A, B, C, D. This is going to be the C, and the D is going to be up in here. So this is going to be the new A and the new B. Right? Now I'm going to look on the right if the market already, yes. As you can see, the market broke our up Fibonacci. So when we are doing the first analysis, we want to see where all this goes, right? So this is the next starting point of the uptrend. So this is going to be our A, and this is going to be our B. This is the first high as soon as possible after the market hits the not the extension. The B is the first high as soon as possible after the A. And Fibonacci retracement tool. There you go. Where is our C? The C of the original is the deepest point inside the AB boundary after the B, before the market hits the appropriate extension. And we're going to keep track of our swings. A goes to B, B to C, and C to D up in here. Let's color code this in red just to make a difference. And our D extension is up in here, so this is the D. And we're going to move our A goes to C, right? A goes to C, and B goes to D. Let's see, this is our B. Horizontal lines to help ourselves, A, B, and we're going to draw another Fibonacci. So A, B, C. I'm going to compress the chart. I want to see if the market is going to break my... And yes, again, on the next Fibonacci, as you can see, the market is going to break again for the second time, right? So let's move. Okay, so we are here right now, and the market is moving up and down, right? So, well, I'm not sure if we are in an up ABCD. So I'm going to do a down Fibonacci. So this time is going to be a down Fibonacci, and this is a nice example because we have the A is up in here, right? What is the A? The way is the highest high, is the absolute high, is the starting point of the downtrend. Where is the B? The B is the first low as soon as possible after the A. And some of you are saying, well, no, this is not the B. It cannot be the B because whatever. And I'm telling you that this is the B, everybody. Because this B is not breaking any rules. It's a center candle with two candles on the right and two candles on the left. So this is a low, right? So we have the A, we have the B. Fibonacci retracement tool. Where is the C? The C is the highest point in a down ABCD, right? Is the highest point inside the AB boundary after the B, before the market hits the appropriate D extension. And of course green goes to green, and this is the D down in here. So we have a new ABCD. I'm going to draw the Fibonacci retracement tool. So the C is going to be this one. A goes to C. You learned this already, yes, everybody? So, and B goes to the D. So the B goes to the D. And again, green goes to green. Why am I drawing, everybody, a down Fibonacci? Because I'm not sure if the market is going to reverse and break my down Fibonacci. I cannot start my up Fibonacci in here without knowing first if the market is going to break my down Fibonacci. Because if a down Fibonacci is still in place, and this is where we are going to lose money, everybody. This is where you're going to lose pips. If you draw your Fibonacci in the wrong way, right, like in this example, I don't know, I need to check, but if the down Fibonacci is going to be still in place, this up Fibonacci is going to be what? The contrarian, right? So I need to make sure first that the market break my down Fibonacci before I can say that, oh, this is the original one, right? The original one is still in place. If the down Fibonacci is going to be in place, then this up Fibonacci that we're going to draw is going to be our contrarian Fibonacci. So I need to check what is happening in the market. Okay, so let's continue. A goes to C. A goes to C, and B goes to D, and green goes to green. The D must be a low, and the low is down in here. Let me see if it's green. Yes, still green. Okay, so green goes to green. This is the A goes to C. Come on. And B, I'm going to delete this one. This is from the before. So this is the B, right? And this is the A. This is the new A, B, C, D. A goes to B. And yes, as you can see, everybody, this is the weekly chart, Canada JPY. And if I'm keeping track of the swings, this is the first swing, A, B, C, D, second swing, A, B, C, D, and third swing, A, B. So we are in a third swing on Canada JPY weekly chart. Okay, so this is the C, is up in here, and the D is somewhere down here. Now, we need to check all together from the monthly, right? From the monthly chart, because if our D extension is outside the position trade, then we need to reverse our Fibonacci's. Okay, so the Fibonacci is this one, no doubt about this. So this is the C, and the projected D extension is in here at this level. Now, if the projected D is outside the position trade, which goes back into 2002, then I need to reverse my Fibonacci. Why is that? Well, what's the chance the market to hit the extension? Well, until 20 years ago, the chance is 0, right? And yes, of course, the market can do anything it wants when it wants. But technically speaking, I have 0 chance that this market is going to fall and fulfill this green D extension. Okay, so I need to go with all these Fibonacci's. I need to go on the monthly chart first, and I want to check. So as you can see, the position trade, let's color code this in red, dark red, like this. Okay, clone. So this is the position area This is the monthly chart right now you are looking at, and my D extension has, okay, I'm going to say 0 chance, but 1% chance, because there are no guarantees in the market. 1% chance, almost 0, that the market is going to fall and hit the D extension. Okay, we don't know, we don't have the crystal ball. Maybe it will, but I don't think so. Okay, so for this reason, when we are talking about how and when and where to draw the Fibonacci's, I'm going to delete my down Fibonacci and I'm going to start drawing an up Fibonacci. Okay, so if you're thinking, oh Passion, but why we have the down Fibonacci is still in place, the market didn't break the A? The answer is yes, all this is true, you are right, but the D extension is far below the position area. Okay, and this is why we are going to draw the up Fibonacci, because the bias, everybody, the long-term bias is up. Okay, and of course you should learn from these webinars, because different currency pairs and different time frames are going to give you different pictures. Just remember to apply the same rules. Okay, so let's go back on the weekly. Okay, so are we clear on that? Do you understand why I'm going to delete the down Fibonacci and I'm going to start drawing an up Fibonacci, original one, AB? You can even write some text on the chart if you want to remember. So I'm going to delete. Okay, so back again. Where is our starting point of the uptrend? Starting point is here. This is the absolute low, this is the lowest low, this is the starting point of the uptrend, and the B is quite easy to spot, right? It's the first high after the A. So this is going to be our A, this is going to be our B, Fibonacci retracement tool, and our C is down here. Okay, this is our C. So let's make a trading exercise, everybody. Okay, let's make a trading exercise so you can learn how to think when the time comes. Okay, so let's say that I'm going to delete a few things. Let's say that we are here right now. Okay, we are here and we want to trade, right? We want to make pips and money. So what do we need to do? We need to identify the contrarian Fibonacci and we need to identify the confirmation Fibonacci. And when the market moves, we need to adjust all 3 Fibonacci's. When the time comes, we need to adjust the contrarian. When the time comes, we need to adjust the Fibonacci of the confirmation. And lastly, when the time comes, we need to adjust the original Fibonacci. So we have the A, we have the B, where is the C? Okay, we're going to use the C. So let's perform this trading exercise today. This is the market and you don't see the future. You don't have the crystal ball, neither do I. So far this is our C, right? This is the lowest point inside the AB boundary. And I want to go together with the trend. So I want to go long. I want to buy Canada JPY on the weekly chart. But I don't want to work hard. I don't want to trade like 200 trades. I want to enter one high probability trade. I don't want to enter 20 or 50 trades. So I need to identify the contrarian Fibonacci. So my sub A, you can call it 1 or you can call it contrarian A, whatever. So my sub A, what is this sub A, everybody? Is the starting point of the retracement. In this example, the sub A equals the B high of the original Fibonacci. Where is the sub B? The sub B is the first low as soon as possible after the sub A. So in this example, our sub B equals the C, right? And I'm going to draw the Fibonacci retracement tool. I'm going to color code it differently. Retracement, there you go. And I can see that if the market is going to retrace, well, I'm not going to, or maybe I could trade this retracement, right, with the counter trend line break. This would be the counter trend line break. No, not yet. So this would be the counter trend line break. Well, I would not enter this trade. I would not trade this retracement because if I would enter here, I need the full body candle. So this would be my risk, right? And this would be my reward on the retracement trade. So I'm risking more than I'm making. Color. So, and okay. Green. So I'm not going to trade this one. Okay, but I'm going to monitor the market. So let's see what's happening. The market is moving. The market should go down and should hit the sub D extension of the contrarian Fibonacci, which is down here. And let's see, bam, it hit the sub D and we're waiting for the low, and the market is falling, okay, there you go. And you could think right now, oh Passion, but this was a great trade, look at the profit that you could make. Well, you cannot think that way, everybody. You are going to have problems. Why is that? Because it's easy for us to say, oh, this was a good trade, but when the market was in here, look at the risk-reward ratio. Look at the risk-reward. And if you are breaking the rules, it's just a matter of time that you are going to have problems in your account. Okay, so what we're going to do, we're going to move our sub A to the sub C. Okay, sub C is up in here. So we're going to move our sub A to the sub C, and the sub B goes down here to the sub D. So this is going to be our sub B. Okay, we're going to delete the risk-reward ratio and draw another contrarian Fibonacci. There you go. We have another sub A, sub B, and when this happens, you can already compress the chart. Now, what you can see is that the sub D extension is still inside the AB boundary, okay? And right now our sub B equals the C of the original one, okay? So if this is the counter trend line break, okay, if this is the counter trend line break, let's color code this in black. Okay, let's wait. Okay, we have a counter trend line break. Now, can we trade this C? Yes, we can. Yes, we can. Because yes, it is a 50-50 trade, right? This C down here is not confirmed, but our risk-reward ratio, if this is the green goes to green, right? So this is our reward, and if I'm going to put my stop loss below the A, okay, this is my risk. So this is a trading opportunity if you want to go long, okay? Oh, Passion, but the C is not confirmed. Yes, I know it's not confirmed yet, but you can enter because of the risk-reward. And still, bear in mind that yes, this is a 50-50 trade. I have 50% chance, because the C is not confirmed, I have a 50% chance that the market is going to hit the extension. Okay, so let's see what is going to happen. The market is moving, and finally is moving up, right? So I'm in profit. Let's wait. Okay, now let's say that we missed our entry, right? We missed our entry. We missed this entry and we are crying, right? Oh my god, I missed the entry, I was sleeping and da 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 da. No problem. We are going to use the confirmation Fibonacci. So we're going to delete the risk reward. Okay. I'm going to leave the contrarian, okay, and I'm going to draw the original Fibonacci. So where is the starting point of the extension? This one, everybody, is the starting point of the extension, because the same rules apply. This is the lowest low, this is the starting point of the trend. The starting point of the extension is this one. So the sub B of the contrarian equals the C of the original, and also equals the starting point, which is going to be the sub A. And don't worry if you don't understand. Please do watch these recordings over and over and over again. Don't think that you are going to watch the recording once and you are going to learn everything and anything. You are not going to do this. Okay? It's not that you are not smart, everybody. Our brain can take only some amount of information. Okay? You need to practice and re-watch these webinars again and again and again. Okay? So this is the sub A. Where is our sub B? The same rules apply. The sub B, sub B is going to be the first high as soon as possible after the sub A, and we are going to color code our Fibonacci of the confirmation as the same of the original one, because it's going in the same direction. Okay, now I have the original Fibonacci in place. I'm going to delete the contrarian because the market broke our sub A up in here. I'm going to delete, not this one. I'm going to delete the contrarian Fibonacci, so no more contrarian Fibonacci sub A, sub B. So we have the chart, and that leaves us with the original Fibonacci and the Fibonacci of the confirmation. Sub A, sub B, right? Sub C is the lowest point inside the sub A and sub B. So sub C is here. Okay, red goes to red, and our sub D, sub D is up in here, right? There was no high. There is no high at the red. The red goes to red, so the first high is in here. Okay, and what I'm going to do? Well, I'm going to use the horizontal line to help myself. So the sub A goes to sub C, which is here, and my sub B goes to sub D, which is in here. And I'm going to draw another Fibonacci of the confirmation. Okay, so we are here right now, and I'm going to delete a few things. So okay, delete. Okay, this is our C of the original one, and we are here right now. Okay, if this would be the example, you can trade this counter trend line break. Okay, so let's see, this is our sub A, this is the sub C, and let's see. Bear in mind, everybody, that you need to keep track of the extension of the original one. Okay, still green goes to green. Now let's see what is going to happen. So the market is up, and let's see, it's moving up, moving down, retracing, still retracing, retracing, going up, going sideways, retracing down, right, retracing down, and bam, the market broke our Fibonacci of the confirmation. See, the market just hit our sub A. The market broke our Fibonacci of the confirmation. When this happens, everybody, you need to cancel, erase your Fibonacci of the confirmation, okay, and start drawing what? The contrarian again. Why is that? Oh, Passion, but you said that when we are in the extension. Yes, sir. But when the market breaks the confirmation Fibonacci, there is an 80% chance that the market is going to retrace into a deeper level. Okay? This is the reason. So, and we are almost out of time. This is going to be our sub A, the contrarian, right, and our sub B is going to be down here. Sub B, okay, sub A, sub B, and let's draw again the contrarian Fibonacci. Let's color code it differently. Okay, now let's see where is our, let's compress the chart. And as you can see, everybody, our C is not this one anymore, it's down here. The sub B is our, just for a few pips, but the sub B is our C. Now, good point, bad point. The good point is that the extension of the contrarian is again below the A of the original one. What does this mean? This means that this C is confirmed. In here it was not confirmed, remember? In here the C was not confirmed. So right now the C is confirmed. So we can enter trading or a counter to random break, or you can wait, or if you missed this entry, you can draw again the Fibonacci of the confirmation. Okay, so this is the sub B, come on, this is sub B, and you can start drawing your Fibonacci of the confirmation. And this is going to be the sub A and the sub B. Okay, so sub A, sub B equals the C. Sub A is in here, and the sub B is up in here. Sub B. And don't bother, everybody, if you don't understand or if you think, oh, there is too much information and I don't get it, just go with the original one. Don't bother trading the contrarian, don't bother using the Fibonacci of the confirmation. Okay, just go with the counter trend line breaks and with the original one. Okay, so let's see how this confirmation is going to play out. So it was up, moving sideways, moving, and hit the extension finally. Okay, so sub A to sub B, sub B to sub C, sub C to the sub D. This is the extension of the sub D. So we are going to adjust, right, our sub A and adjust our sub B. Let's see how it's going to play out, and bam, again, the market, whoa, the market broke our Fibonacci of the confirmation and not, see, this is the C right now. Okay, so the market broke our Fibonacci of the confirmation, We're going to delete, 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 and we are here right now. What we're going to do, no panic. You know, the market can do anything it wants until, remember this everybody, until the market stays inside the AB boundary, is going to hit the D of the original one. Or as the saying goes, until the market breaks the A, is going to go the Fibonacci way. So this is our new Fibonacci of the confirmation. And we have a new C, right? First the C was here, then was here, now is here. This is our C. Okay. The sub A, the contrarian, everybody is still in place. The market didn't break the sub A. Okay. But if you missed, and this is Canada JPY on the weekly chart, if you missed this entry in here, don't bother, you can re-enter trading the Fibonacci of the confirmation. Okay, so counter trendline break, and we are here right now. This was the C, this was the flash crash in December, if I remember, but we are here right now. Okay, and the market should go up. Remember, the Fibonaccis are not 100%, but they do work 8 times out of 10. And also remember, everybody, if you put your stop loss above or below the C, you are getting in the way of the natural movement of the market. So if you put your stop loss in here, the market will take you out in here. If you put your stop loss in here, the market will take you out in here. So the best place is 10 to 100 pips below the capital A of the original Fibonacci. So you are out of the wave of the market, right? If you put your stop loss in here, you are safe, and you don't panic, and you don't care what is going to happen in here. You are safe in here. Okay, everybody, see you back tomorrow on Wednesday with another recorded webinar on the 3 Fibonaccis. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.